All right, everybody, welcome back. You ready to do another deep dive?
Absolutely, always ready to jump into these.
Awesome. So today we're diving deep into the world of Philip Fisher and his book, Common Stocks and Uncommon Profits. This is like a Bible for growth investors, right?
Absolutely, yeah. It's considered a foundational text in the world of investing, and for good reason.
Okay, so what are we going to learn from this guy? What's his big secret sauce?
Well, Fisher's all about long-term growth.
Hmm.
He's not interested in quick flips or trying to time the market. He wants to find those companies that are going to keep growing and compounding returns for years, even decades to come.
So basically buy and hold, but like buy the right stuff and hold it forever.
Exactly. But it's not just about buying and forgetting. Fisher has a very specific method for identifying these companies, and it involves a lot more than just looking at their financial statements.
Ooh, intriguing. So what does he do? Like read tea leaves or something?
Huh, not quite. One of his most famous techniques is something he calls scuttlebutt. Basically, he encourages investors to go out and talk to people.
Wait, like actually talk to people. Like get off the computer and like pick up the phone.
Yep. Fisher believed that some of the most valuable insights about a company come from talking to its customers, its competitors, its suppliers, even former employees.
Wow, it's like investigative journalism for investing.
Exactly. It's all about getting the real story behind the numbers. Finding out things that you wouldn't necessarily see just by looking at a balance sheet.
Okay, I love that. Scuttlebutt. I'm going to have to remember that one. But talking to people can only get you so far,
Yeah.
right? What else did Fisher have up his sleeve?
Well, he was also big on checklists. In fact, he developed a 15-point checklist for identifying companies with exceptional growth potential.
15 points. That's pretty intense. Let's break down a few of those. What were some of the things Fisher was looking for?
All right, so first up, he looked at a company's product or service. Is it a truly outstanding product? Is it something that customers love and are willing to pay a premium for?
Makes sense. You got to have a good product if you're going to be a successful company.
Exactly. And it's not just about having a good product today. It's about having the ability to innovate and stay ahead of the curve. Fisher wanted companies that were constantly improving and coming out with new and better products.
Right. So think like Apple always coming out with a new iPhone.
Precisely. Next, Fisher was obsessed with the company's management team. He believed that great management was essential for long-term success.
Okay, so we're not just talking about like, are they good at their jobs? What kind of qualities was Fisher looking for in a management team?
Well, he wanted people with integrity, of course. Honesty, transparency, those were very important to him. But he also wanted people who were ambitious, who were driven, and who had clear vision for the future of the company.
It's almost like he was looking for the same qualities you'd want in a leader in any field, right?
Absolutely. And finally, Fisher looked for companies with a strong sales organization and a commitment to research and development. He knew that even the best products wouldn't sell themselves, and that companies needed to invest in finding new and better ways to reach their customers.
Got it. So basically, Fisher was looking for companies that were well-rounded, had a great product, strong management, and a commitment to innovation.
Yep, that pretty much sums it up.
Okay, so let's say you found a company that meets all of Fisher's criteria. What's next?
Well, the next step is to understand the company's financial position. Fisher was a big believer in looking at the long-term trends, rather than getting caught up in short-term fluctuations.
So like, don't freak out if the stock price dips for a day or two.
Exactly. What you want to look at is the company's overall profitability, its debt levels, its cash flow, and so on.
Right. So you got to look beyond just the PE ratio, which a lot of investors get obsessed with.
Exactly. And then once you've done your homework and you're confident in the company's long-term prospects, Fisher's advice was to buy the stock and hold it for the long haul.
He sounds like a pretty patient guy.
He was. He understood that true wealth is built slowly and steadily, not through get-rich-quick schemes.
So this long-term thinking, how does that apply to like the average investor today? It seems like everything moves so fast now.
It's more important than ever. In today's world, with all the noise and distractions, it's easy to get caught up in the short-term ups and downs of the market. But Fisher's principles remind us to focus on the fundamentals, to find those great companies and stick with them through thick and thin.
And don't get shaken out by every little blip in the market.
Right. Remember, the market is always going to be volatile. There will always be ups and downs. But if you've invested in a solid company with a bright future, you can ride out those storms and come out ahead in the long run.
So Fisher was really ahead of his time with this whole long-term investing thing.
He really was, and his ideas are still incredibly relevant today. In fact, Many of the most successful investors in the world, including Warren Buffett, credit Fisher as a major influence on their investment philosophy.
That's pretty impressive company to be in.
It is. And it's a testament to the power of Fisher's ideas.
All right, so we've covered a lot of ground here. I'm curious, what would you say is like the one big takeaway you want listeners to walk away with from this deep dive?
I think the biggest takeaway is that investing should be about more than just numbers. It's about understanding businesses, it's about finding companies that are doing great things in the world, and it's about being patient and letting your investments grow over time.
I love that. Invest in things you believe in. And speaking of things we believe in ending these deep dives on a thought-provoking note.
Always got to leave them wanting more, right?
Exactly. So here's one for you all to ponder. If you had to apply just one of Fisher's principles to your own life, not even just investing, but like your life in general, what would it be and why? Think about it. Maybe it's the importance of finding a company with a strong management team and applying that to choosing who you work with. Or maybe it's the idea of long-term thinking and how that applies to your career or your personal relationships. Whatever it is, let us know, and we'll catch you on the next deep dive.
See you then.